We focus on technology now and the appetite for putting money to play in 2024. HSBC Innovation Banking says 2024 could be a year of recovery for UK venture capital. The HSBC division includes the former Silicon Valley Bank UK, which was acquired for just £1 after US regulators shut down its parent company in March of 2023. We last spoke to the CEO, Erin Platts, following the launch of HSBC Innovation Banking in June. Very pleased to say she joins us now in the studio for an update, Erin. And we do want to get that update in terms of the integration of the business into HSBC, of the former assets of Silicon Valley Bank into HSBC. But before we get there, let's start with the top line of the report then. You see a relatively optimistic picture when it comes to venture capital in 2024, after, frankly, a challenging year for 2023.
Absolutely. Well, good morning. Thanks for having me. I think it's been a challenging couple of years, actually, for the UK innovation economy. But the top level highlights from the report that's come out of Deal Room and HSBC Innovation Banking is I do think we have reasons to be optimistic for 2024. And that's based on really two main drivers. The first is how much money the venture capital community is raising within the UK and broader Europe. That's been $6.6 billion last year, and that's been over $25 billion for the last 3 years combined. The other indication is where is this money going and how quickly? And if you look at 2023, $21 billion was deployed into the UK, but most importantly, the first half of the year versus second half of the year deployment, we're up over 40% from second half to first half. So I think we're starting to see that unlock in terms of VC money going into the sector, which gives me a hope that we're starting to get to that new normal run rate, that $20 billion plus year in the UK.
You also say, good morning to you, Erin, you also say that VCs have plenty of dry powder, and some may be evident in the stats you were just talking about there, that they've invested some, but there's still more money that they could invest. So what's the next catalyst needed, do you think, to allow VCs to put more of their money to work?
I think it's a couple of different factors. So the good news is there's money on the sidelines today, and that's just a UK stat that I shared. I think we should also remain conscious that the UK is a really attractive place for international investors. So I do anticipate we'll see more money coming through from the US. A number of US venture funds continue to put feet on the ground in the UK and Europe. And then, you know, of course, the macroeconomic factors do play a part in our industry. So as we see rates starting to come down, that will be yet another driver. And then perhaps we'll talk about the public markets later as well.
Yeah, and of course, you talk about the macroeconomic picture, and of course, the higher rates environment was crucial and central to the turmoil that we saw across the banking space last year. You were at the forefront of that. You had to navigate that. And as we said, you ended up working through and pulling SVB UK into the arms of HSBC. Where are we? Give us a progress report. Where are we in that integration? You done and dusted, or is there more work to be done?
Yeah,
what does that look like?
Absolutely. So it's been a hugely busy 9 months. I'm very pleased to say that the integration is complete. The team has been extremely hard at work, but we are starting the year off in a really positive place. Integration's done, transition's done, which is a lot of work, especially when you're merging two banks together. But from an HSBC innovation perspective, both in the UK and also the global teams that we've since brought on board since June launch, we are out in market and we're back to business.
What was the biggest challenge about the integration, Erin? Was it technology? Was it culture? Both of those often hard. What was difficult?
I think it's the sheer amount of technology integration to bring two banks together in a short period of time was probably the hardest part, and wanting to also take really good care of our clients and team and continue to grow while you're doing that integration as well. So I would say that's probably the toughest spot.
Part of it presumably about maintaining and retaining the clients that SVB had.
Exactly.
Have you been able to build on that client base? Have you seen growth there?
Absolutely. Q4 was actually the strongest quarter of new client acquisition that we've had even before acquisition. So again, I think that's two things. That's the market saying combination of tech expertise and stability and breadth of HSBC platform, and some of the tailwinds that we're starting to see from the market have converged into a really solid Q4 for us, and I'm hopeful that continues in 24.
Is HSBC having to do anything differently now in the next wave of trying to attract clients within this particular sector? Are you changing the business at all since the integration of SVB?
I think I would say we're not changing, we're evolving, right? We now have more tools available, being part of this amazing HSBC platform globally that we need to bring to bear, whether that's investment banking, private banking and wealth, asset management. So our job is to bring all of that to the innovation economy. Now, we also need to remember, post the events last March, that this is a really dislocated environment, right, for banking and lending and supporting innovation businesses globally. So I think all of the banks, the funds, the sources of capital participating in this space need to continue to up their game.
Do you think we see a turnaround in the capital markets, capital market activity this year? The IPO pipeline, is it starting to? It was dry. It was essentially empty last year. Is it likely to come back in 2024?
I think so. There's the UK lens, then there's the global lens. So we've got 63, private unicorns left in the UK that are, I think, there's a good handful that are IPO candidates for 24. I don't think we're going to see much activity before Q4. I think we're predominantly going to see activity in the US, and that will follow into the UK. For me, the first 6 to 9 months of the year is going to be really M&A driven. We still need to see some consolidation in this space. I'm hopeful we'll see a little bit of untightening later this year. But for me, my money is on 25 being most active.
And if we do see listings, then, Erin, I mean, will they list in the UK? What's the conversation like when you're talking to tech businesses who might be tempted to go to the US, of course?
Yeah, that trend has been persistent for the last 20 years. I do not think we were going to see a step change in 2024. Now, the good news is we're having all of the right conversations as an industry to make sure that the UK is the most attractive place to list for UK businesses. I don't think we're there. So I do think we will
What's missing on that?
So I think it's a combination of factors. So there's been a huge amount of work. The Mansion House reforms is a great example. So I think we know what we need to do. So now it's implementing some of the reg change, some of the culture change, and so unlocking some of the pension capital to go into the space as well.
Just briefly before you let you go on valuations, particularly within fintech, taking a bit of a hit last year. Are we bottoming on valuations within fintech as a big component for the UK? Is that starting to turn around?
Yeah, I think so. Fintech's a really broad chart. So you're looking at the subsectors within fintech. I think we are starting to see the bottom with respect to more of the enterprise-driven fintech. I think there's still some perhaps recalibration that's needed in more of the B2C or direct-to-consumer, some of the payments businesses as well. I do think we'll see growth in 24 in fintech.
Erin, thanks very much. Thanks for your time. Erin Platts, CEO of HSBC Innovation Banking UK.